So we were discussing problem number 33. Already we have calculated the NPV of this project, of this problem. NPV of project X we got 46,135 and project Y 36,550. So after that we have to start calculations IRR. Project X. So first the annual cash inflows are not constant, so we calculate fake PVP, imaginary PVP. So total cash inflows are 1,65,000 divided by 5, 33,000 is the average cash inflow. So fake PVP, the formula is initial investment by average cash inflow. Initial investment is given as 70,000 and the average cash inflow is 33,000. 2.121 is the fake PVP. Now locate 2.121 or its nearest value in PV of annuity table against year 5. So you will find 38% we are having 2.106. So we begin our calculations at 38%. Year, then cash inflow, then we take PV factors 38%, then we take PV of cash inflow. 1, 2, 3, 4, 5. PV of cash inflow. So what are the cash inflows of project X? 10,000, 20,000, then 30,000, 45,000 and last one 60,000. These are the cash inflows. Now PV factors at 38%, 0.725, then 0.525, 0.381, 0.276, last one 0.2. If you multiply cash inflow with this one, 7,250, then 10,500. Then 11,430. Next one 12,430. 420. Sorry. 12,420. Last one 12,000. The total of this is 53,600. 53,600. What is the PV of cash outflow? PV of cash outflow is equal to 70,000. PV of cash outflow is 70,000. PV of cash inflow we got 53,600. There is a lot of difference. To increase this PV of cash inflow, we decrease the rate. To increase the PV of cash inflow, we have to decrease the rate. Earlier we have taken 38%. Now suppose if we try at 30%. PV factors at 30%. PV of cash inflow. We are trying at 30%. We are not sure. If again it is required, then we further decrease. But right now from 38% we have decreased to 30% to find out whether how much cash inflow we get. So 30%, 0.769. Then 0.592. Next one is 0.455. Next one is 0.350. Next one is 0.269. When you multiply this, you will get 7,690. Next 11,840. 13,650. Then 15,750. Last one 16,140. The total comes to 65,070. Again, 65,070 is less than 70,000. The PV of cash inflow is less than 70,000. So to increase this PV of cash inflow, we further decrease the rate. अभी नहीं अब हमको एक वैल्यू 70,000 से बड़ा चाहिए, एक वैल्यू 70,000 से छोटा चाहिए. यहाँ पर दोनों भी छोटे हैं. Both are less. So to increase the PV of cash inflow, we further decrease the rate. Let the new rate be 25%. PV of cash inflow. Now we are taking further decreased 25% and we'll see. The 0.8, then 640, next we get 0.512, next 0.410, last one 0.328. Now when you multiply, it is 8,000, 12,800, then 15,360, 18,450, 19,680. The total is 74,290. Now we got it. One value is more than 70,000 and the other value is less than 70,000. If you take 25%, you are getting 74,290, which is more than 70,000. When we take 30%, it is 65,070, which is less than 70,000. Our IRR lies between 30% and 25. In a 25 and 30% के बीच में IRR है. IRR lies between 25% and 30%. So actual IRR we calculate. So IRR lies between 25 and 30%. So IRR is equal to RL plus PVCF80 minus PVC divided by delta PV into delta R. Lower rate is 25%. What is the cash inflow at lower rate? 74,290 minus cash outflow is 70,000 divided by 74,290 minus 65,070 into difference is 5. 25 plus 4,290 divided by 4,290 9,220 into 5, that is equal to 25 plus 2.33 is equal to 27.33. 27.33 is the IRR of project X. Now we start project Y. Calculation of IRR project Y. Same. What is the total of cash inflow? The total of cash inflow is 1,30,000. 1,30,000 divided by 5. So how much you'll get? 26,000. Now fake PBP. 70,000 divided by 26,000. You are getting 2.692. Now locate. In PV of annuity factor, locate that, we'll get 25%. At 25% you are getting 2.689. 2.689. Hence we start at 25%. Exactly same procedure. Here 5 years. Now, at 25% we are taking. First of all, cash inflows. What are the cash inflows of Y project? 50,000, 40,000, then 20, 10,000, again 10,000. And PV factors we need. The PV factors at 25% is 0.800, 0.640, 0.512, then 0.410, last one 0.328. When you multiply, you are going to get 40,000. Multiply cash inflow with PV factors, 25,600. Then you will get 10,240. Then you will get 4,100 and 3,280. 83,220. 83,220. So at 25% we got 83,220. Actually cash outflow is 70,000. 70,000. To decrease this cash inflow, we have to increase the rate. To decrease the cash inflow, we have to increase the rate. 25% से ज्यादा अमाउंट आ गया तो रेट को बढ़ाने से ये कैश इनफ्लो कम होगा. तो लेट द न्यू रेट बी 30%. विल टेक 30%, 5% बढ़ा देंगे, देखेंगे कितना नहीं आया तो फिर और एक ट्राई करेंगे. तो 30%, व्हाट द पीवी ऑफ कैश, पीवी फैक्टर्स 0.769, 0.592, then 455, then we have 350, last one is 269, multiply it 38,450, then we have 23,680, then we have 9,100, next 3,500 and 2,690, 77,420. Still it is more than 70,000. We have increased 25,000, 25% से 30% करें तो भी हमको ज्यादा 70,000 चाहिए. We are getting 77,000. Further to decrease, we increase the rate. Let the new rate be present value factor at 35% will take. 5% पहले बढ़ाए, अभी नहीं आ रहा. हमको एक वैल्यू बड़ा चाहिए, एक वैल्यू छोटा चाहिए, लेकिन छोटा नहीं है यहाँ पर, फिर बढ़ाइए वैल्यू तो और 35% ले लेंगे. व्हाट आर द पीवी फैक्टर्स एट 35%? 0.741, 0.549, then 0.406, 0.301, 0.223, multiply it 37,050 PV of cash inflow. 37,050, 21,960. Next one is 8,120, 3010. Last one 2230. Total is 72,000. 72,370. Still it is more. 35%. Very much unfortunate. We have taken 25%, then 30%, 35%. Still at 35% is more than 70,000. We have to further increase. 35% we have taken. Now we have to take 40% and see. Here, cash inflow, PV factors 40%, PV of cash inflow. अब तो आना ही चाहिए. 1 2 3 4 5. PV of cash inflow, it is 50,000, 40,000, 20,000, 10,000, last one 10,000. Now 40% PV factors. 40% PV factors are 0.714, 0.510, 0.364, 0.260, 0.186. Multiply 35,700, 20,400, 7,280, 2,600, 1,860. The total is 67,840. Now we got it. One value is less than 70,000. At 40%, 67,840. Cash inflow at 40. PV of cash inflow. PV of cash inflow at 40%. PV of cash inflow at 35%. 72,370. PV of cash outflow 70,000. Therefore, IRR lies between 35% and 40%. 35 और 40 के बीच में IRR lie हो रहा है. Now actual IRR we have to find out. Now we'll find out the actual IRR. RL plus PVCF 80 minus PVC divided by delta PV into delta R. So lower rate is 35%. And at 35%, 72,370 minus 70,000 minus 67,840 into 5. 35 plus 2370 divided by 4530. That is equal to 35 plus 2.62, 37.62%. Finished. This is the IRR. Now ultimately we have to give the conclusion. For making conclusion, we'll draw two columns, X project, Y project. NPV we got it, IRR we got it. By comparing this, we can be able to give the decision 37.62%. X value 27.33%. Already we have calculated. NPV 46,135. And Y project is 36,550. That's all. Now, NPV. X project 46,135, Y project 36,000. That means from NPV point of view, from NPV criteria, project X is better because it is having more NPV. IRR 27.33 and 37.62. So according to IRR criteria, Y project is better. So we are getting contradictory result between NPV and IRR. NPI prefers X project, whereas IRR suggests Y project. That's it. Now, 34th problem. Problem number 34. See the problem 34. A project requires an investment of 10 lakh rupees and is expected to generate cash inflow of 3 lakh, 3 lakh 50, 460, 380, 325 for the next 5 years. 5 years is the life. Cash inflows are fluctuating. Outflow is 10 lakh. The risk-free cost of capital 10%. Evaluate the project using IRR method. Only one method it is asking, IRR. Right? So 34th problem. Calculation of IRR. First we calculate average cash inflow. So 3 lakh plus 3 lakh 50,000 plus 4 lakh 60,000 plus 3 lakh 80,000 plus 3 lakh 25,000 whole divided by 5. So 3 lakh plus 3 lakh 50,000 plus 4 lakh 60,000 plus 3 lakh 80,000 plus 3 lakh 25,000. That is equal to 18 lakh 15,000. Divided by 5. 3 lakh 63,000. This is the average cash inflow. Now fake PBP. Initial investment is 10 lakh given in the problem. Average cash inflow 3 lakh 63,000. 10 lakhs divided by 3 lakh 63,000. It comes to 2.755. Locate 2.755 in PV of annuity table against year 5. Now we have to locate. In this PV of annuity table, we are locating 2.755. 2.755. Here it comes. at 24%. At 24% it is 2.745. Therefore, we begin at 24%. We start our calculations at 24%. Here, cash inflows, PV factor 24%, PV of cash inflow 1, 2, 3, 4, 5. PV of cash inflow. Cash inflows are 3 lakh, 3,50,000, 4,60,000, 3,80,000, 3,25,000. Now 24% we require. 1 divided by 1.24 is equal to 0.806, 0.650, 0.524, 0.423, 0.341. Now we multiply 3 lakh into 0.806. You are getting 2,41,800. Similarly, 3,50,000 into 0.65. 2,27,500. Similarly, 4,60,000 into 0.524. 2,41,040. Then 3,80,000 into 0.423. 1,60,740. Last one, 3,25,000 into 0.341. 1,10,825 plus 1,60,740 plus 2,41,040 plus 2,27,500 plus 2,41,800. It comes to 9,81,905. PV of cash outflow is equal to 10 lakhs. It is given in the problem. PV of cash outflow is 10 lakh. Now, to increase the PV of cash inflow, we decrease the rate. Let the new rate be 20%. पहले 24% लिए थे तो कम आ गया, अब कम कर देंगे, 4% कम करके 20% लेंगे. देखेंगे PVF at 20%. Then PV of cash inflow. We'll try. 1 divided by 1.2 is equal to 0.833, 0.694, 0.579, 0.482, 0.402. That's it. So 3 lakh into 0.833, that comes to 2,49,900. Similarly, 3,50,000 into 0.694, 2,42,900. Then next one, 4,60,000 into 0.579, 2,66,340. 3,80,000 into 0.482, 1,83,160. Last one, 3,25,000 into 0.402. It comes to 1,30,650. Now we'll take the total plus 183 160 plus 266 340 plus 242 900 plus 249 900. It comes to 10,72,950. Now you can see it is more than 10 lakh. So one value is less than 10 lakh, the other value is more than 10 lakh. So therefore IRR lies between 20% and 24%. 20 और 24% के बीच में IRR है. Now we can calculate actual IRR. The actual IRR we can calculate by using the formula IRR is equal to RL plus PV CFAT minus PVC divided by delta PV into delta R. So lower rate 20 plus 10,72,950 minus 10 lakhs divided by 10,72,950 minus 9,81,905 into 4. Difference is 4. So 20 plus 72,950 divided by 10,72,950 minus 9,81,905. 91,045. $72,950 into 4 divided by 91,045. 3.21. IRR we got 23.21. 23.21 is the IRR. Right? Now 35th problem. Problem number 35. See the problem 35. Rao and Company provides 35th problem. Rao and Company provides the following estimates to the present values of the future expected cash flows after taxes associated with investment proposal relating to plant expansion. There is a proposal to expand the plant. So for expanding the plant, two alternatives are available. PV, present value of cash flows. Already PV, CFAT are given. There is no need to multiply with PV factors. Already multiplied. Without expansion, we are expecting PV, CFAT 2 lakh, 3 lakh 50,000, 5 lakh. And without expansion, अगर expand नहीं करे तो तीन possibilities है. 3 possibilities are there. PV, CFAT 2 lakh, 3 lakh 50 और 5 lakh. With expansion, अगर expansion करे तो cash inflows जो आएगा 4 lakh 50,000, 7 lakh, 5 lakh. And the probabilities are given for each of the events. 0.2, 0.3, 0.5. The plant expansion cost rupees 4 lakh. You are required to advise Rao and Company regarding the financial feasibility on the investment with the use of decision tree approach. This is the problem on decision tree approach. In theory, we have discussed one of the method of incorporating the risk in capital budgeting decision is decision tree approach. In decision tree approach, we show the problem in a diagrammatic form, in a horizontal tree form, where the alternatives are given in different branches. Now, first of all, the company is having two main alternatives. The alternatives are without expansion or with expansion. The company can go without expansion. The company is having 3 alternative PV CFAT. If the company goes with the expansion,